In this video, I'm going to break down everything that you need to know about SIPPs, from what they are, why they're potentially a great choice for some, and how to actually get started if it's something that interests you. But first, what on earth even is a SIPP? Well, basically, SIPP stands for Self-Invested Personal Pension, and it's a special account that lets you save for retirement. However, unlike any standard workplace pension, where you kind of know you're investing for your future, but you're not really sure where that money goes, with a SIPP, you'll get full control and sight on where your money is getting invested. This is because with a SIPP, it's you who's making the decisions and not the company your workplace has chosen. You'll invest your retirement pot into things such as stocks, bonds, funds, and even property, giving your money a much higher chance of growing faster than traditional saving. So far so good? Okay, let's now dive into some reasons as to why SIPPs are great and how it could actually benefit you, starting with the first, which is of course the tax benefits. When your money grows within a SIPP, you don't have to pay any tax on it. This is very much like an ISA. Everything that you add and make within it is going to be protected. The next benefit is that a SIPP is something that the government actively supports, and lucky for us, they are going to reward you with a 20% boost to every deposit you make into your SIPP. This means that every £800 that you invest into your SIPP, the government will top that up by an extra £200 in tax relief. This applies to everybody as a minimum, regardless of their financial situation, but if you're a higher rate taxpayer, you can claim even more tax relief, all the way up to 45% on any investments made into your SIPP. What I'll do right now is put a chart on screen so you can see what benefits you get depending on your tax bracket. Now the third benefit, one that we won't want to think too much about, but it's still equally as important, is that with SIPPs, you can essentially do what is called passing it on. This basically means that if you did pass away, the money in your SIPP can be passed on to your loved ones tax-free. There'll be no inheritance tax or anything like that, purely tax-free savings for either your future or your family's, just in case anything happens. So with that said, you might be wondering, who exactly should be opening a SIPP? Well, the two main types of people are, number one, those that are self-employed. This is because with self-employment, you won't get access to a workplace pension, so you won't receive the benefits of an employer match and all of those tax deductions. So a SIPP is almost a vital way to secure your financial future if you are self-employed. But secondly, they're just as important to those that are in a workplace pension that's already saving their maximum that the employer will match. Just like we said, a SIPP can be viewed as an additional tax reduction and bonus from the government on top of what you're already saving. So now that we know this, let's talk about some rules, with the first being the limits on how much you can contribute, and to me, I actually think it's pretty generous. Essentially, you can choose to contribute up to 100% of your entire income, or £60,000 per year, whatever comes less. Now, if you ask me, I think it's pretty decent. I will say, if you are earning a lot of money though, like a lot, like £260,000 a year a lot, your allowance might start to shrink, but don't worry, you'll still be able to put in at least £10,000 every single tax year. And also, on the other end, even if you're not working, you still can contribute up to £3,600 a year to your SIPP and get the government bonus just like everyone else. In terms of what you can invest into within your SIPP, I've kind of gone over it already, but I think one of the coolest things that you get about a SIPP is just the full choice of where your money can go. Now, I know that for some people, they may be a little bit hesitant when it comes to picking investments and a little bit hesitant when it comes to picking stuff for their financial future. Don't worry, that's absolutely fine. Many platforms out there, like InvestEngine for example, offer a managed SIPP where maybe they ask a couple of questions about you and your goals, your interests and things like that. And from here, they will make all of the investment decisions for you with a managed portfolio. At the end of the day, it's all about choice and freedom when it comes to SIPPs, so do whatever is comfortable for you. So now that we know all of this, I guess you might be thinking now, how do you actually get started? Well, it's pretty easy. We've got 3 simple steps. Number 1, we need to pick a provider. First, you'll need to choose a company or platform that offers SIPPs. There's lots of options out there, so pick one that works for you. The things you want to be considering though are things such as platform fees, the online buying and selling fees, management fees, especially if you're going with one of those managed SIPPs, and just the general ease and use of the platform. What I've done is put on screen some of the best do-it-yourself SIPPs alongside some of the great managed ones as well for you to go and check out. These are all accurate at the time of recording this video. The second step is for those that are doing the do do-it-yourself SIPP, and that is, of course, deciding what you want to invest in. And one of the best things, like we've mentioned about this, is why it's so good, is that you can invest into whatever you want, whether it's stocks, bonds, or even property. You'll need to make that choice yourself. But if you wanted an idea just from the people that I have conversations with, a typical route that most people do take is looking at diversified index funds, like maybe one in the S&P 500 or even something more global. But of course, once again, the choice is completely yours. And then finally, the third step is once your account is set up and you know what you want to invest into, you can start putting money into it. And essentially from here, the more money you put in, the more you'll get from the government, and the bigger your retirement savings will grow over time. Now that we know this, of course, there will be a time where you want to access your money. So let's now talk about when you can actually do that. Unlike an ISA, a SIPP is of course a retirement incentive, and there are going to be rules on when you can withdraw. First of all, the earliest you can access your SIPP funds is age 55, but keep in mind that this will rise to 57 in 2028. Also on this could even potentially increase even more in the future, depending on the decisions that the government makes. But once you do hit that required age, you can start withdrawing your savings, but there's another couple of things that you do need to keep in mind. First of all, when you do hit that age, you can take out 25% of your SIPP as a tax-free lump sum. This means that you can basically withdraw a quarter of your total pension without paying any tax on it. However, for the remaining 75%, you will pay income tax at the rate that you currently fall under. This is basically because whilst the government gives you tax relief when you do contribute to your SIPP, they do expect you to pay taxes on your withdrawals when you start using the money. Now, I know what you're thinking, this may sound a little bit contradictory when I said it's completely tax-free, but remember, you are not taxed on anything going in, which is going to be the majority of the money that is going to help grow your SIPP, and there's going to be no double taxes here. And also, because the tax rate on your withdrawal depends on your income at the time, if you're in a lower tax bracket when you retire than maybe when you were contributing, you could actually save quite a lot of money. It's also worth mentioning, but it goes without saying, that you can't take that money out earlier than the required age unless you do meet some special circumstances like being in poor health. So basically, once you do deposit money into your SIPP, it's tied up until you reach that appropriate age. But there you have it. SIPPs are a great way to take control of your retirement savings, get tax relief, and let your money grow on autopilot with a little bit more control. Whether you're self-employed, have a workplace pension, or you just want to take more control of your future, SIPPs can help you do that. But do remember, SIPPs do come with risks, so always think carefully about your investments and talk to a financial advisor if you ever do need any help. But other than that, hope you found this video useful. Don't forget to like, subscribe, and leave any questions in the comments down below, and I'll see you in the next one. Take care.